Look, there's all these weird concepts with like ICT, SMC, and Wyckoff, a lot of which have a lot of value to them and some that I use myself. However, they have tainted your idea of what an indicator is and how it should be used. A lot of you believe that indicators are completely useless and there is no room for them in your trading model. I'm here to debunk that entire idea and help you with one indicator that I've kept in my trading model for the last 6 years. Yeah, my model has changed significantly over that time. However, there's one thing that has stayed the same, and it is this indicator I'm going to teach you about today that has helped you make nearly $100,000 to $200,000 a month consistently in bull and bear markets. Let's get into the video. So the indicator we are talking about today is a version of the 200 exponential moving average. I'm going to leave a link below where you guys can download this and maybe trail along as I'm doing this video so you can see how it works in real time. The first thing that I want to preface this video with is this isn't some algorithmic based indicator. It is simply based off of the last 200 candle closes and gives you an average price of them. Now, this average price is represented by this red and green line. If price is trading above this EMA, it is going to green itself out, giving you the indication that there is a bullish bias. If it is red, then we know there's a bearish bias. So you really do not need any sort of daily bias or sense of market structure if you're using this indicator. A lot of my students who I taught a little over 3 to 4 years ago know and remember that this model and this EMA strategy is one of the most consistent throughout every single market. ICT didn't work 5 years ago, right? SMC may have not have worked 3 years ago, but they're pretty prevalent nowadays with a lot of people trading fair value gaps and order blocks. This is the indicator and the one model of trading that has never changed once. This worked back in the financial crash, this worked back in the COVID crash, and this works today. So I'm going to be going through a few different low time frame models with this EMA that you can use tomorrow to profit off. And seriously, just download the TradingView indicator below and test it out in your next session. It will blow your mind how easy it is. And no, I don't make any money off this. It is a free indicator. So let's get started with showing you guys some of the low time frame stuff. We'll move to the high time frame stuff after. The first thing that I want to go over is the different type of pairings that this works on. It does work on all crypto and all indices and all stocks. However, I'm going to first show you what to look for to see if it is actually a good confluence on that pair or not. A few things that you do not want to see, just like with any market structure or any indicator, is a lot of false signals. So the first thing that you can see for a false signal is, take this for example on NQ on the 1 hour. If price is trading in between this, giving you false closures below and then coming back, this choppiness is an indication that you don't want to use this indicator on this pair at this moment. But there are times where it will show a lot of value, and at the times where it shows a lot of value, it's easy to find that. It's where it's respecting it. As we can see, price drops here, respects the EMA, moves back, respects, pops up, and then you have the recycle. So what I mean by recycle is prices now has a change of delivery. So I'm going to put this emblem here. This is where price has changed its delivery, and we can expect for the EMA to change colors. And then as the EMA comes back up and retests these levels, it gives you a massive short opportunity. Again, massive short opportunity, and then you have your recycle again. And this is where price changes its delivery, and we can expect to go long. And then right after this, you get that beautiful retest, and then take that long into the new highs. So as you can see from this brief example, it is extremely intuitive on how you would use this EMA in actual trading. And we're kind of just going to go back, a few days or so on NQ and kind of show you different periods where it worked out well and where it didn't. This period here worked out fantastic, a great rejection from the highs, and then move to the lows. And then you have your change delivery, you have your retest, and price takes out the highs. It is insane how consistent this is, and there's no algorithm. It is simply a reversion of trend, which markets typically do. And as ICT teaches, price will revert to the mean, and a lot of the time this mean average is the 200 last candles that were closed. And we can see the retest here. After this retest, we can see another recycle effect where price changes its delivery, change the delivery, and then you have a clean rejection here. It takes out the lows, and then again change the delivery, and price is bullish for the next like 7 days. So this is just on the 1 hour time frame. What I'm going to show you guys now is going to be on the 5 minute for NQ, and as I'm recording this video, this is August 5th. So I want to show you kind of how it's been reacting the past few days and how you could have taken advantage of it. One of the main things here that I like to see and how I use this strategy a lot is if it breaks a key level, like if it breaks this buy side stop level and then also breaks above on the 5-minute and EMA and holds that level as it has, I expect price to continue to move higher. As price moves higher, you see you have plenty of opportunities to take long positions here. And this is on the 5-minute. I mean, this is less than 1 hour and 30 minutes of price action. Let's move back into the past a little bit. We can see there's an extended period of time on the 5-minute where price actually just never comes and touches this EMA. So at that time, you do not have an EMA positioning to be had, and that's fine because this is just something I want you to add to your toolbox, not something that you have to use every single day. So let's also go to the 1-minute real quick. I want to do a lot of these low time frames setups to show you kind of how it looks and how price reacts to it. And as you can see, solid models and solid strategies typically have strong reactions to price. And when you have a strong reaction to price, or at least a key area like this, you get a pop here, you get a rejection here, and then you get plenty of rejections here. Again, a rejection, you get a false break, and then a rejection to low a day. And then you get the recycle and the change delivery, and price is bullish from there. You can see that most of the time when price is having a tough time breaking down or breaking away, it is next to that 200 EMA on one time frame. So now this is the part of the video where I want to tell you guys about some of the best time frames to trade this on. So number one is going to be on the 1-minute, and then we're going to skip all of the in between and go to the 5 minutes. The 5 minutes, an extremely powerful time frame. We can check things like SPY as well, even if you're trading options. We can see today the intraday high on SPY was given with this daily 200 EMA in the 5-minute. And even if we go in the past, we can see that there's several periods of time where we were given some indication that something was happening. Here's a breakdown and then a close below, giving you an indication that price is going to be bearish for the rest of the day, in which it was. Let's see if we can find another test. Right here, I mean, we have a change of delivery. You can expect a short for the rest of the day, and then we have a retest confirming that short. After hours, we didn't get a break above this, and it's bullish for the rest of the next day. So it's kind of insane. This day looks like it actually had a hard time giving you any indication. You get a bounce. That's a long and a high day, so that's fantastic. And you get a change delivery here. Price moves down. I don't know if you would have had any actual insight off this unless it took out previous low of day, which it did not. So no actionable insight on that, and possibly a losing trade. And then you get a few retest, bounce, and then a little bit of confusion from the EMA. So most times you're going to know exactly if this EMA is giving you concrete evidence that it's going to be working for that day, depending on how it reacts to current price. Let's just keep moving back and see if we can find some more examples. Here we go. Some great bounce examples on, let's say, July 23rd, right? Price moves up, bounces off this EMA, takes high day, easy trade there. And again, a lot of buying pressure here at the 200. And if we take this off, a lot of people wonder, why was price getting bought up here? Why was price moving here? And a lot of my students who use this EMA and in conjunction with a lot of our ICT and SMC concepts have a fantastic time finding trades because this is just an easy bias giver, right? Market opens, 10 minutes in a market open, you're retesting the high day, 200 EMA on a 5-minute, boom, you get your complete short. Now let's move to another time frame, to the 15-minute. 1 minute, 5 minute, 15 are fantastic time frames that I like to use. The 15 specifically, I prefer to use in crypto. So we're going to go over some crypto examples right now, specifically on Bitcoin. But here we go. Bitcoin right now at current market price is testing this. I'm going to expect it to hold and for BTC to move down in the trend. Again, let's see if we get any other tests here. Here's several different tests, some fake breakouts, and then a closure and displacement back into the trend, giving you the indication that price is going to continue bearish here, in which it does. Here's a clean example, of course, just right off the EMA. It's okay for price to move out like it does here. Price moves out, retest, comes back, and then displaces below. It gives you the idea that price is now going to still continue lower because there is no major displacement to the upside. Here's your change of delivery. And immediately after this, you could have taken a short position to low a day down here. Fantastic. It is, it boggles my mind sometimes just like how many people don't use this. And I know there's a lot of EMA traders out there, but this one's specifically using the close and open candles to give you a wider range for the EMA is so damn strong. Look at this. Here's your high, here's your higher day, here's your fake break on a high day, continue to short. Just wait for price to break back down. You have a little bit of confusion here, right? But again, you get massive respect here. Here's your change delivery and price is bearish for the next, 3 days. Doesn't get much better than that. And you have to do nothing. You can be as lazy as you want. This indicator does everything you want in one go. So That's the 1 minute, 5 minute, 15 shown in real time, just going back on a few days of data. Now I want to show you guys some of the stronger time frames in which my students use more often than not. This is going to be the 1 hour, and it's going to be, let's actually replace, I'm going to do a little bit of replay and get back all the previous data we had because we actually wanted to go over something on the daily. But I'm going to go over on SPY real fast. We're going to do this on ES Futures. We're going to go to 1 hour. And I want to show you guys some points where you get extreme value. Like this is extremely valuable information right here, contrary to what it may look like. You get the break, which is a sign of the change of delivery, retest it, and you get a long, right? This long potentially could have been into the CME gap, which is right here. Fantastic opportunity and an amazing trade happens just there. You sell off because that's your buy side stops. Price gives you change delivery, and then you just short down into that low of day and another fantastic opportunity, and you would have a stop loss of a 1 hour closure outside that zone. So incredible that it just works this well over and over, such as this too. Here you have your change delivery back here, you know to go short. Here's some retest, maybe you got some retest here, short into these lows, but here's the beautiful retest after taking all of this buy side liquidity, right? All that buy side premiums taken, and then you can short into the low of day as you get a candle closure outside that, stops with a candle closure above into the previous day lows, and you're just having a swell old time. I mean, it's incredible. It's one of the only indicators in the market that I think actually works consistently and actually has merit to be in your trading strategy. So that's the 1 hour. Let's now go to the 4 hour. And I also want to show you guys this on NQ1. We'll just keep moving in between assets to show you how well it works. So first thing, we have had a pretty much one of the worst weeks on NASDAQ in recent history. If you're a bad trader, at least by typical native standards, or you just think that you're not a good trader, you don't understand market structure or anything, that's okay. Use this indicator. This tells you where the change of delivery occurred, multiple retest on the bearish retest, right? The line turned red, bearish retest on this, and this gave you the Pico top, right? This is the Pico top in which you then had a massive 2,500 point move on NASDAQ. Sure, what if you missed it? That's fine. You got close to it here. You know that there's going to be a pretty juicy reaction. And also, you know, that is a daily fair value gap bearish retest as well. So you have so much confluence. Like using the EMA alone, honestly, works just fine. But if you add other confluences like this bearish fair value gap plus the distance from that EMA, you have a fan-fucking-tastic short position and you really can't be stopped. Now, let's go back more in time and see how well over the long run this actually worked. So change of delivery again, you have your change of delivery here, the recycle, and we know to go bullish, you have a retest here, your fantastic opportunity to start buying up equity. Now let's go over some bad examples, right? Here's a phase of bad examples. And the best thing about like bad examples is as soon as you take like that one loss, we're like, all right, we're gonna go long here into these highs. Okay, price completely just erupted to the downside, stopped you out. You just stop trading until you see price reacting again. That's the fucking beauty of this indicator. Just wait till it starts giving you an obvious indication that it's respecting this 200. Here's an obvious indication for a long period of time that there's respect on this. Respect here, respect here, respect again. I mean, it is just giving you every single bottom that you could have asked for. And I wish more people talked about this because I think it's not used enough. And a lot of people are actually hurting themselves in their trading, at least new traders, because this is one of the best tools as a new trader for you to use. So you can see at what periods to not trade. These is just a lot of jumbo and chop. And you can see at what periods to trade, right? When you get some respect, here's the breakdown, here's the breakup, retest again, take it to new highs. I mean, it's freaking incredible. So let's talk about something on a higher time frame. I will only use 1, 5, 15, 1 hour, 4 hour, and then daily. So NASDAQ futures, check this out. This is probably the bulk of this video. We're doing this for 15 minutes now. This is the bulk of the video because on the daily time frame, you can have the daily bias at any given point without having to figure out what the new weekly opening gap was rated or if buy side liquidity was displaced. This will literally tell you at which point the 200 is now being changed delivery here, the CISD. Here's the retest, bearish retest once, bearish retest twice, and then it falls all the way into the lows, right? Here again, we see another example of this coming up. It's a fake out, so you understand that maybe you went long here, right? Maybe you went long as soon as this started breaking up and you took profits into that high, which would have been perfect, by the way, a perfect sell, and then you would have waited to see how price reacts in the next few hours. It breaks down below, you know to go short. Where to go short? Again, this is the only part of the discretionary model that you're going to need is you just go short into the next set of lows. You're on the daily time frame. You're going to be looking for liquidity to liquidity. And there you go, 2.3R. You didn't have to really do anything. The indicator did the entire job for you. And then as the market maker model subdues, takes out highs, this is the fake market structure break right here. A lot of people would think that market structure break occurred here. No real displacement, and you're hitting the daily 200 EMA on a bearish outlook. This is where you go short against the masses. This is where you go short against ICT traders, where you go against the Wyckoff traders, the SMC, the ones that hate retail, right? You're outperforming them every single day with a single 200 EMA. And there you go. That's a 4.7 R trade collected and swing. So this is not only does this work on the bearish side, right? This works on the bullish side consistently. It gives you the bottoms, right? It gives you exactly where you can expect price to react to. So take this video, extremely seriously, because it will work tomorrow. It's going to work the next day. Go to the 2-day time frame as well. After the day, they use 2-day. The 2-day provides a lot of great opportunities as well. So you can literally just do a top-down analysis, and we're going to do that with Ethereum right now, of how price reacts to this and how you can get a pretty decent idea of where the daily bias is going to move. So watch this. We're going to do ETH USD. We're going to remove all of our drawings. We're going to the monthly. I don't think that there's going to be any value in the 200 EMA on the monthly. I don't think there might even be 200 candles of data for us yet. But let's go to the weekly. Weekly, a fantastic view too, because the weekly gives you kind of like the last point of reaction, where the last point that price should react to. And as we can see, previously when we have had a lot of choppiness over here on the weekly, it's giving decent signaling of where price should be stopping, or at least just to stop the bleed, right? Here's the massive bleed from 2020 and 2021, where as price was dropping, I think over 80%, right? Where was it going to stop? Just using the EMA. As you got close to it, this is where it stopped. The EMA stopped the bleed, collected price, accumulated it for over a year, and then distributed it. Now, price is manipulated again and coming back down and retesting this level, so we know where it will react to. And as of today, this is where price reacted to. Price reacted to this exact level. You're welcome. I mean, just putting an indicator on, you know exactly where price is going to react to certain things. And then you can go to the daily and figure out what the current bias is on the daily. And as we know, if you've been under a rock, the daily bias for all of crypto is extremely bearish right now. We had a fantastic period in early 2024 that gave us this huge expansive move, which you could have used the daily EMA for. It's trading near it for an extended period of time. It's building up pressure, and then it explodes. Again, you have your fake breakdown here in July, right? You have only one candle close below. The next candle's closed very, very close to it, right? Giving you the indication that we might actually want to come back up and take liquidity. And guess what? With just a very minute understanding of liquidity and the draw on liquidity and where stops are going to be ran, you knew that buy-side stops were going to be ran at those highs before. Boom, buy-side stops ran here, and then price comes back. Retest this, you take a long trade into the, 4-hour highs, wherever it may be, right? You just we'll mark it out here. Next daily high, you would long somewhere around this level. After that, let's go to 4 hours, see how it looks. Oh my, insanely accurate too. So this is where the 200 EMA bounced right here, right? So this is where you would take your entries, and then you would take it long into the next confluence, which would be buy-side stops being ran at the daily high, equal highs here, and then again, on the 4 hour, it gives you the top. This is the 4 hour EMA top. It puts a smile on my face every time with how accurate this is, because you truly don't need to fall into the ICT mentorship program to become a profitable trader. And I honestly believe that would hurt you overall more than anything. Go tomorrow, trade NQ, ETH, or ES. Go to the 5-minute and the 1-minute and just use EMA retest and see how well you can do. Target a minimum of 1 to 2 R, preferably 1 to 3.5 R, and just see how well you can do. It is incredible how much this model has made me in the past 5 years. Of course, it's made me a lot of money because it's the one thing that I've kept in my trading model. Nothing else has left my trading. I've gone from retail concepts to Wyckoff to SMC to ICT variations, but throughout all of those models, I've kept one indicator, and it's this daily 200 EMA. You can get it below. I truly hope you guys use it because it's changed my life, and I made this video for free to hopefully change one of yours. So you're welcome, and I'll see you in the next video where we're going to be reviewing more trading strategies and indicators. Peace.